Hello everyone, welcome to Chill Dill Trades. I'm excited because this is the first video on the channel, so thanks for tuning in. To give you a quick synopsis of what I do on this channel is I basically look into what's going on, whether it's overall markets, specific stocks, and I break down the charts as well as some other important aspects to understanding where a stock might be going in the future. So for today's video, I am covering Ford and GM. Let me change one of these stocks. I have it up wrong. But Ford and GM, they've had some crazy movement this year, as well as this last month, or last few days even. So we're going to break down where we think these stocks are headed in the future. The first thing I want to look at for these charts is the really long term. So when we look at the 20-year monthly charts, we see that even though these stocks have been kind of going parabolic this last year, in terms of long-term charts, not much has happened. So when we kind of look at this average price range, GM has moved between, say, $29 and $40 for basically the last 20 years. And for Ford, we see a similar thing, different price, but kind of moving between $8 and, say, $15 for essentially the last 20 years. Even more in like the last 10 years, Ford's actually been in a pretty significant downtrend in a bear market. After hitting a high in June of 2014, it's been in a downtrend all the way leading up to COVID. And so let's look at a couple more factors that can potentially determine where the stock is going. So the first thing I want to look at is institutional ownership. I got an itchy nose tonight. Institutional ownership. So what we're seeing for Ford is institutions have been buying pretty significantly over the last 3.5 years. And what you see with each of these quarters is there's actually been more buying than selling, which is pretty bullish for the stock. If you think a stock was going to go down forever, you wouldn't be buying it. Especially, man, my nose is real itchy. You would be selling it more than you were buying it if it was going down, even if you thought it had some life. But when we look at every quarter over the last 3.5 years, every quarter except for two, there's been more buying than selling for the last 2.5 years. So even though we saw that chart going down, there are actually people pushing more money into the stock as it was going down. And I think that's kind of part of the reason we're seeing this really parabolic move. Many factors, but one of them. We see a similar thing with GM as well. Over the last 3.5 years, all but one quarter, we've seen, somewhat significant buying compared to selling. One of the big things to call out with GM is institutions own 80% of the stock. That is a big number to own. Institutions would not be owning 80% of the stock if they think it was going down in the long term or even the short term. So this is the first thing I want to call out, just showing like in a long-term scenario, Ford and GM are looking good. But let's break down the charts and kind of figure out where we might see some upcoming resistance, as well as kind of where the stock is heading in the short term. So first, to look at the long-term charts, let's put in some key support and resistance points. So the first one I want to put in is this support line from past. Anywhere there's a peak is going to be support under the current price. But we also see an all-time high around $68. And so ironically, or maybe not ironically, we're actually getting close to this $68 mark right now. So in my opinion, we don't have much upside left in GM. It's at $34 now. We have $4 more before it hits that 20-year resistance point. That's really significant. As we're coming up to kind of figure out what's going to happen over the next couple months, we're going to see a pretty low probability of it breaking above 68, but we'll have to see if we get to that point. For the Ford stock, let's set in a couple resistance points, since that's mostly what we have going forward, because we have a much higher high in the past. But one thing that we're approaching pretty soon is we're approaching this $18 mark. So Ford went up to $16 today, and it only has $2 more till it hits this really significant resistance. So we see it tried to break out once, twice, 3, 4 times in the last 20 years, and every time it got rejected. So the question is, will it be different this time? I have a suspicion that in, I would say, the next 6 months, we have a pretty low probability of breaking above that 18 mark. And if we do break above, it probably is going to come back below. Let's set a couple more points just to get some context for Ford. Another ironic point, we see a lot of resistance in the past at the current price. Funny enough. Isn't that funny how the chart's always going to tell you what's going on? Um, so we're actually at resistance right now, which is a pretty significant. Let's put a couple more. Actually, that's good for now. A couple other things we want to look at is just where RSI is. So that's kind of measuring how overbought or oversold something is. So on the really long term, GM and Ford have hit overbought for the first time in like 10 years. Yeah, 2014, 2014. So at these last peaks were the last time both of these stocks were hit overbought territory. So we're heading into overbought right now as well. So in my opinion, these stocks probably have $2 to $3 more at max, maybe $1 more or so, depending on how violent the market wants to get. But we're heading into significant resistance and we're in overbought in the big picture. Let's go ahead and break down these charts in a little bit more couple year context, kind of what's been happening. So the first thing I want to say is these, at least for GM, it's in a really healthy spot right now. So we see the 100-day, which is turquoise, or 200-day turquoise line, purple line is 100-day SMA, and the red line is 50-day SMA. So when we see the lines stacked in order of days, that's a really bullish sign for the stock. What you see is when these lines are in reverse, the stock is heading down, meaning the 200 days above the rest of the lines. But when it flips and it's in order this way, the stock's typically bullish. And so we're, in a long-term perspective, we're still in a really bullish scenario for GM. Let's look at a couple other things. So RSI on the daily, we're not quite overbought, so that we could potentially push up to the 68 mark. The 68 price point is probably going to push the stock close to overbought and probably going to be peaking out around that point in my perspective. But let's draw some more long-term upward trend lines, since that's the way the stock is headed right now. And this will just give us a grasp on if the stock does pull back, say in the next few months, or 6 months, whenever that time might be, where are some points, since we are still really bullish on this in the long term, unless something in the charts tells us different in the future, where are points that the price might come back to? And so right now we're seeing the trend line right here. We see it, let's just draw a mark. It bounced off the trend line back in May and then kind of took off from there. And so we just, as of today, broke out above the recent all-time high. And this is really significant because tomorrow, June 4th, we're going to need a confirmation day. Whenever a stock breaks out, the next day needs to confirm that that breakout is true. If we see a reversal, then we don't really count that as a breakout, even though the price went above. So we're going to see the confirmation. And then after confirmation, if it is to stay above this all-time high, we're going to want to see a back test. So basically what that means is, here's a resistance, the stock breaks out, and then it comes back and hits the line again and bounces back up. That's a really bullish indicator that we're still positive momentum and there's more upside movement for the stock in the short term. Let's draw a couple more short-term trend lines. So here's another one. So we're still above this trend line. In the short term, what you're going to look at is if it breaks above this, if it comes back down and we get stuck in this triangle, this ascending triangle. Ascending triangles when you have a resistance point and a line going upwards. If we come here, it's most likely breaking lower, in my opinion. But we'll have to see when that time comes. But pay attention to see if this comes back and tests this trend line. If it breaks below this trend line, we're probably coming to the 50-day and we'll probably retest this trend line. So those are a couple of the short things. If we do come back, let's look for some other support lines that used to be resistance. So here's a pretty significant one in the past where the stock had a hard time breaking out of. There's one point. We have the all-time breakout. We also have a gap at the 50-day. So typically for stocks, when they gap up, eventually in the future they have to come back and fill those gaps. So that's going to be something for eventually for it to come back down to this 58 and fill that gap. And it's also really close to this support at 57. So I'd say in the short term, if we do break below this trend line, which I would say is a high probability in the next month, then we're going to want to see it come back and either test this trend line or test this $57, $58 range. I would say that's in the short term. As I said, RSIs get pretty close to overbought, which tells me that we do need another decent little pullback here. But we'll have to see how the overall markets look. Let's go ahead and look at Ford now and see how this stock is looking. So this one has gone even more parabolic, and I think part of it's rightly so, part of it's not. Obviously, Ford has been releasing a lot of news about their electric cars, their electric trucks. They're seeing a lot of pre-orders, a lot of people interested, and so that's really has sent this stock pretty parabolic. So let's kind of see what's happening in the charts. Let's set some long-term trend lines, which could be potential pullbacks in the long term. Let's do another one here. And then let's do another one here. And let's do another one here, because there looks to be another one. So something really important to know is the higher the angle of the trend line, either upwards or downwards, the harder it is for that stock to keep that. Because if you think about it, for the stock to hold this trend line just the next week, it has to be $18, $19, which is more unrealistic than realistic for this stock. So typically what we want to see is this kind of 45-degree angle. As you can kind of see in this whole price channel here, that 45 just steadily creeps up, and it keeps RSI in a really healthy line between the 45 and 60 range. So you kind of just see the stock just melting up over time, and that's what we like to see in a stock. Because it's gone so parabolic recently, we're going to probably have a decent pullback on this stock. We might see it go up to that $18 mark and test the past resistance points, and if it does and it keeps going parabolic, then we're just going to even see a bigger pullback. So if it pulls back, we have these two trend lines. This one most likely won't hold, but the second one is a higher probability of holding on a pullback. So we're going to want to see if it can come back and test this and keep moving. That's a positive that we're probably going to head towards that $18 mark. But if not that, we have past all-time high around this price point, which is around 1350-ish. It's 1365, but 1350-ish. So that's going to be a really important support line. We also have a gap on this stock similar to GM. So it's going to have to come back and fill that at some point, and a pullback to slow down the indicators like RSI and MACD. We could potentially this gap fill and start to see some consolidation there. So we have a gap fill at $14. We have an all-time breakout just below that at $13.65. And if it breaks both of those trend lines, I'm going to be looking for this 100-day and 50-day area. So let's see where we have some more support in the past. I would say we have it around, it's actually kind of like this $12 to $13 range. I'll just put it at the $12 because I don't want to overwhelm with the lines. But this is going to be a really big support around this $12, and it's also around that 50 and 100 day. So typically when charts get too far away from their SMAs, they come back and test them. This is something we constantly see. A big breakout, unsustainable move, comes back to the SMAs, breaks out, comes back to the SMAs, breaks out, comes back to the SMAs, breaks out, come back to the SMA, breakout, come back to the SMAs. But that's just a really quick breakdown of both GM and Ford. I think these stocks have credible momentum with all that's happening in the economy. I do think that they need some pullbacks pretty soon. But draw these charts on your graph and pay attention to whether it breaks through these trend lines and support lines, or if it comes back and tests those and starts consolidating. But thanks for watching this video. I really appreciate it. This is my first one. Please like the video. It tells me you like this content, and subscribe. I'm going to start posting 3 to 5 videos a week. So I really appreciate it, and I'll talk to all you guys soon. Thanks so much.